Hello guys, welcome to the Trading Parrot. As you can see, Bitcoin has been hitting the liquidity on the top end, leaving untouched the liquidity located at 100k. This chunk is becoming heavier, so my question is, should we be expecting now a retest of 100k to take the late longs, or how much upside do we have? And I'm talking about this depression on the longer term liquidity at around 110k, together with the new selling wall that we have right above the price. We're gonna discuss about this and a lot more. Guys, if you like this type of content, make sure that you are subscribed to the channel. Hit the notification bell to get notified every time I put out one of these videos. Can we get 1,000 likes in the video today? If we do that, we're gonna give strong tickles to the YouTube algorithm, and I'm sure that that's gonna force it to show this content to new people and grow the channel. That's a win-win for both of us. And yesterday I sent this poll to Telegram, Patreon, and YouTube, and I got very different answers, but I'm gonna show you what people say in YouTube. 245 people say I am in a long, 12% say I'm in a short, 24% I'm actively looking for a new entry, 18% I'm sitting on my hands, not liking this price action. Let me know in the comments what is your current stand. Someone say I'm hedging, you didn't put that option. Whichever is your option, if you want to trade with $500 for free, there's a link for Bybit in the description. Just hit register to claim. They will give you $500 to trade on any of these coins, and you get to keep the profit. So hopefully you're gonna turn that into actual profits. Keith is saying the 50-day MA is on a trajectory to golden cross with a 200-day MA in a tight range that has confluence with the trend line and the 2025 YO. I think that's the year open. You can't really ask for stronger technical support than that. I personally consider a dump to the level a gift, which I think is 93.3, but at this point I don't think it's a likely one. In fact, the further the 21-day MA, the green, gets to 100k, the less likely we're going to get the support test. That is the support he's been looking for. Whether BTC retests 100k or not, I'm happy to see consolidation in this range before the next leg up. And Axel is today talking about the UTXO profit to loss ratio. Every strong price acceleration that rapidly shifts large volumes of coins from loss into profit pushes the 30-day SMA of the UTXO profit to loss ratio above 200. That is something that is noticeable on these red bubbles. We had one when we managed to reach 74k in 2024, another one when we reach over 100k, and now it's getting heated around the area where we are, but that's still missing at least one half to get to the overheated area. Looking at some news, I scroll through them and I'm pretty much not interested in anything that I haven't read before in a previous video, and the only one that attracts my attention is Ethereum price gained 90% the last time this indicator turned bullish, and that means potentially seeing 3.6k if that plays out. And we're talking about specifically the Goshen Channel midline on the 2-week chart. If we go to the Goshen Channel in here, you can see that the previous times that we see a rejection of the middle line that is supposed to be painful, indeed in this area in here it happens twice, but once we cross the middle line, then we get the rally. In here we see a rejection that is around 2022. We see multiple rejections even in 2023, but after we manage to cross the middle line around end of 2023, we get the rally from the 2000s into the 4000s. So here we are again facing that middle line of the Goshen Channel on the 2-week chart. Hopefully we're gonna get a similar performance. And here's an interesting one. I'm not necessarily agreeing with this at all, but it's funny to see all these different calls, and I'm gonna tell you how I interpret this. You tell me what you think. But in this channel so far, we keep insisting that every call for a decoupling of S&P, traditional markets, and Bitcoin has so far been a failed one. Yes, of course, we can have 1-2 weeks of decoupling, meaning that they take different direction, opposite directions. I have never seen one like this. Usually It is the case that when Bitcoin goes higher, people say that there is a decoupling. When the S&P goes up and Bitcoin goes down, they usually say Bitcoin at some point is going to catch up. In this case, the theory says that we could see a crash of a 50% on the S&P, and the analysts, no joke, he believes that Bitcoin can rally to 600K while at the same time the US economy goes through the toilet. I understand the theory, I understand the expectation. I don't necessarily subscribe to this idea. I will say the immediate reaction will be a complete sell-off if we get a crash of 50%. And my take on this article is because we've seen how much Nasdaq now is struggling to break out to the upside together with the S&P. We're going to look more on the chart in a second. And Bitcoin has rallied, has done things before the Nasdaq and the S&P. And this article is targeted to people to believe that the S&P crashing is not negatively going to affect Bitcoin. I think that is manipulation. You let me know in the comments what you think. Some news on the aggregated open interest. You can see that yesterday we sliced and we put a close above 33 million. That has been resistance 4 times in a row in this area, and I was comparing it with all the times that we struggled to get beyond 20 billion during 2024. Once we managed to do that, open interest led the direction of Bitcoin price as well to the upside. You can see in this case, Bitcoin price is still below the all-time high, but open interest is getting very close to break the all-time high of $35 billion. I will say that if we get that signal and we hold beyond that level with Bitcoin price still holding, we're gonna get a huge move. So far indicating it's going to be to the upside, but I will let you know if I see something different. And since people have given very good feedback on this particular slide that I maintaining, I share the link to my Patreon community in case they want to keep an eye during the day. So we're going to discuss the things that I change. I'm keeping the gray background on the 4 hour. I'm keeping the dark red that is about to turn into neutral as well on the daily. And we can go now to the charts and see what's going on. Well, first of all, you can see that still so far the RSI on the 4 hour is putting lower highs with each of these peaks. We have done the analysis of what happens if we get into an RSI of 93, which will resemble what we did in the breakout in 2024. And of course, that has a crazy target. It is a moving target. Today is 144. And we are within this flag that I'm gonna call a bear flag. I know many people say that if the flag is like this, is bullish. If it's pointing up, is bearish. Personally, I think that if the flag is pointing up, we can call it bearish, particularly if we see volume going down during the flag, momentum going down, and only price going up during the formation of the flag. That is a yellow warning. We can still break out to the upside. During this flag, we have those elements, price up, momentum down, volume down. We still broke out to the upside. It's been really crazy price action. Each consolidation is full of bearish divergences of volume and momentum and still moving up. So heads up for that technical call that has high likelihood of playing out, but is not playing out in this market. And that's why I'm mentioning the technical target, but still the watch out for that. Yesterday, we talked about the 67 being resistance. That 67 was located at the time I was recording the video at the low 108. You can see that the price action pinch up until right below 108. We were very close to put an all-time high. And at the moment, the resistance is holding the price in here. You can see that pretty much every breakout from a flag has been from the lows. A successful retest of the low in here produced the second wave, a successful retest with a double bottom, produced the next leg there, and we have already had in here at 102 a retest. So the question is this the retest that is gonna send the price all the way up? Because that retest was too early, it pushed the price rejection back to support. If we were to retest now, that will be 103.2. If we were just to come in the middle of the range, that is 105, but we have already tested that level. You can see in here, we already took half of the lower fair value gap. So there is not much pending business in here apart from the 105.6. Keep that number in mind when we look at the liquidity and the order book to see what's going on there. The reason I have qualified the 4-hour as neutral, as I say in here, we have new higher highs, we put some lower lows as well, and the RSI needs a higher high. Relative to what? Well, the RSI needs to break 68.67, which is the resistance from this peak that we had on Monday, 19th of May. If we don't do that, we get new bearish divergences on the daily. Big progress because we have for a second day a confirmation that we are holding 105.4, which is the top of the range on the daily, as you can see in here. We are trying to claim new liquidity at the top end. Together we put in a new all-time high, which is pretty much a huge deal at this point in time. The likelihood of this being a liquidity hunt is decreasing with every single day that we remain on top. For example, in here you can see that we have two body candles above the top of the range. On the third day we produce the rejection. In here we pinch multiple times, one single day above the top closing, and the third day back down, then some rejections, and all the way to the bottom of the range. So do we have chances in here of surviving in this area? I think so. So far so good. Everything looks ready for the picture. Keep an eye and watch out for that 105.3, particularly with a daily close below it. That could shake things a little bit more interesting than the pretty much guaranteed all-time high that we can see from how things are looking by now. From the RSI point of view and the momentum from the MACD, things are pretty interesting too. You can see that yesterday attempt to break below the white line succeeded with a higher low. We couldn't put a higher high, so we couldn't go into that 77. If we did that, we will have already put an all-time high today at 112K. What we are doing today is just sideways movement. I'm still tempted to leave the pivot on this point of contact, but I suspect that there can be maybe a larger move like this, which is gonna force me to move the pivot to somewhere in here. A reset like that can still go into an all-time high at a lower RSI, but then we start the period of the rolling over and eventually the channel down. All of that can still bring all-time high, but it changes, it shifts the upside, it makes it more humble. So we'll keep an eye on that too. Of course, a breakdown ugly, we get the support at 45 RSI that is located at 97K, and the point of control as well. You can see how that RSI meets at the moment precisely with the point of control. Doing that is very similar to what we did in here. In here, the first time we held the middle ground, the second time we went all the way to the bottom of the range. So you can see, visiting the point of control is not the end. We can still attempt later on higher, just in case it happens and you freak out that we must put a lower low relative to 74. That's not the case necessarily. On MACD, there is a huge battle in here to attempt to put a bullish cross. So far, it's not the case, but the momentum down is very mild. You can see the histogram is extremely shallow, just going sideways. It's not fully clear yet that we're gonna get a strong daily momentum to the downside, and that's why I keep it just in red, just in case, because of the declining momentum, which can still put higher highs in the price and new all-time high. Weekly progressing towards claiming the top of the range. We are in a situation similar to this one in here, where there can be loads of volatility to upside and downside, but overall what happens in this breakout area can define whether we get impulsive move from here or not. We got strong resistance coming in at 109.2. That is the second level of resistance of the month of May according to CPR level, and we have a declining volume. That's the third divergence that matters. Momentum divergences is important but hasn't done any damage to the full rally from 74 so far. Volume, it is important, but it hasn't yet played out to damage the rally. And the third is the profit takers on SOPR. On leverage squeeze, these two signals to sell are reminding me areas like this where you start getting consecutive signals until eventually something plays out. Looking back in time, for example, you get this one that by itself breaks below. Here we have 3 consecutive signals. We still put in a high at 69 before moving down, and during the most impulsive way in the whole cycle, which is this area in here, you get an early signal that moves down 9%. This one doesn't move at all, but if you average both, you still have that downside of 6%. Probably the worst signal in the whole cycle is this one at 43K that then ended up moving 70% to the upside. So always when you play with these signals, I don't average down a hive of signals all together. I wait to get signals completely out of the range later on. For example, averaging down a 44 with a 72, it's a lot better than averaging down all of these consecutive signals in the same price range. Profit takers continue to increase. It's still not extremely elevated like we tend to have in areas like this at 106. At the moment it's 103. Hash ribbons is starting to close the mouth, which is quite promising to get a buy signal, but we are not there yet. Long-term holders and Big Well Explorer still very healthy, very bullish looking together with the spot ETF. Let's have a look at today. After the 600 we got another 300, so there's still huge accumulation. Liquidity levels, we have taken the red on the short term. There's still some green in here to still get to 108.4 and possibly complete this target. That was the secondary target of a setup that I share in my community. The main setup, the technical target from this head and shoulders, was to get into 102.8. But on the retest, I left this line in here in case we got a fake out, because pretty much every single pattern is playing out the opposite. You get a head and shoulders that has a lower target and you end up breaking out from the resistance to the upside, confirming at 105 and then rallying almost 90% to the technical target of the upside, which was $800 higher, completing all this liquidity, which is still there, by the way. How much long-term liquidity we have heavy right next to the price? Well, that ends at around 109. After that, we have this depression at 110, which is going to be some sort of challenge unless we fill the gap with some bearish price action right after 109, assuming that we don't just cross it and we get lucky. Let's look at the order book, and after pinching 108, we are coming back and we see some orders accumulating with 1.1k at 105.8. That is pretty big orders. And we can see in the order book depth, that is a synonym of bid-ask ratio, that we still have tons of orders for buying. And that is influenced by this particular order in here. I'm going to aggregate all these exchanges and see if something else comes in apart from Binance. Well, still the 1.1 is there, and on the top end resistance at 109 and 110. Let's look at High Block Capital, and we got a 007 defending now this 105. That is pretty significant and very early, as you can see. They tend to come in to rescue and move down after a big rejection where they feel more confident, but that confidence is increasing. They're stepping in with a very shallow rejection of less than 1%, and I think that is the appetite still for putting that all-time high. I will say market maker, particularly exchanges, have a huge incentive to put an all-time high. That is more or less consider it their advertising campaign to bring in retail. After all this accumulation that we've seen from long-term holders, from large holders, and all the whales defending the price, they need to shift this that is looking like there is no retail into bringing in some retail so they can distribute into those people. Otherwise, there is no profits. They will have just spent the money investing in all of this, and no one is gonna buy their bags, and that's why there is a huge incentive, in my opinion, for market maker to want those new highs. And I'm talking about all-time highs, of course. Once there is all-time highs, if my theory is correct, we should be seeing the long-term holders to slightly slow down their accumulation, ride the wave up and start the distribution. And then we should see that the short-term holders slightly start becoming more interested in this, fear of missing out and price exploration, then can take the price even higher. They have a huge effect, of course. At least that's the plan. We'll see if this plays out in that way. The delta this morning is 390k, which is very interesting because I think if we go just to 105 and that wall holds the price, that's not gonna allow all this green delta to go back to zero in reset. This is putting the longs in risk. We have this selling wall at 110 with $116 million, which is pretty significant. You can see in history, we have this $290 million holding the price very recently, but the last time we were at around 110k, that resistance was $287 million, and that pushed the price into 74k. So now if we aggregate all those buckets, we can see that the volume is 250, which is also pretty intense. But notice one thing, what were the whales doing at that point? At that top, when we were hitting that resistance, the whales were unloading, and I'm referring to the purple ones, the leading ones. In this area in here, they are still entering in a position together with the brown ones. The rest of the small sizes of positions are all going down, while at the same time we still have a significant wall. But hey, we are at 105k, so there's time for anything. If we get to 110, I want to see what the purple whales are doing. So if we manage to get there, remind me on Telegram group or on my Patreon to have a look at this, because it's definitely going to be very interesting. In terms of fair value gaps, we have one to get into even 105.4 and one to get to 103.4 below the usual fair value gaps. So in a nutshell, the summary that I'm gonna give you just in a second using the Bitcoin status. If you wanna trade Bitcoin, consider doing it on Bluffing. I have a link in the description. You can get 15% cashback of your deposit up until the 26th of May. And not just that, you can get access to my Telegram charts, my Pine scripts, if you use your brand shiny new Bluffing account and you connect it using this link with my Bluffing Telegram group. If you meet the requirements in here and you manage to say hello to me in that group, you can claim for free these two products for 3 months. Right, I still think that the 4 hour is in neutral. It really needs to break beyond that limit of 67 and stop with these decreasing highs that we can see in here, and instead start aiming for that 90 or somewhere here in the middle to bring back the bullishness of the momentum. And what I'm referring for, if you focus, for example, on this top, we started decreasing on the RSI, but eventually we got a huge spike in momentum. That is what produces the actual breakout. So all this contention of momentum and volume at the moment is in the neutral. It needs to prove itself that it can do the move up. Daily momentum, it starts to roll over. The highs are at 85. That can bring the price into 112. I'm not liking the momentum and the bearish cross on the MACD, but I am liking the price action. So it's a little bit of a mixed bag. I will say if we hold at 105.3 one more day, I'm gonna completely flip the daily. In that case, maybe the hash ribbon and the MACD and the SOPR and all of that wouldn't matter. And if we enter banana zone, definitely all time frames are gonna get into the green. In the previous breakout, something I haven't noticed before is that volume started spiking in here, 0.19, and the volume fight only pick up to these highs after we reach this top. We started rolling over on the volume 5 when we reached the top. In this particular breakout, we still don't put a higher high. You can see at this point we already will have put a new all-time high, and the volume 5 was at the very lows. At this point in here, this mountain looks to me like the mountain that we put in here when we were done with the move up. That's why I'm not liking to see this already rolling back down on the daily. But regardless of all those technicals, I think there is a strong argument for market maker to produce that all-time high and make it play out in the way they want. In those scenarios, technicals start mattering less. So that's not gonna flip the technicals that I show you in this chart. They're always gonna be the technicals. But my word of advice is watch out for what market maker is trying to do on the order book, because they might have a completely different agenda. Thanks so much for watching, and I'll see you on the next one. Take care. Bye bye.